Good afternoon. Getting right down to business here. We do more at 4 weekday afternoons, live on the air on 790 KBC, streaming live online worldwide at kbc.com. And yes, the on-demand Mottek On Money podcast, kbc.com, Apple iTunes, YouTube, all your favorite podcast platforms. Big day for Wall Street and the Main Street economy here in Los Angeles. The biggest story of the week for tech in the markets out this afternoon with the release of AI giants NVIDIA's earnings coming out better than expected this afternoon. I will be discussing that big news in just a moment with the one and only Daniel Ives at Wedbush Securities in downtown Los Angeles. Today, the Los Angeles County Economic Development Corporation, the LAEDC, released its annual economic forecast for Los Angeles with a massive firestorm recovery in focus. I will discuss that live later this hour with CHEUNG, the president and CEO of the Los Angeles County Economic Development Corporation, the LAEDC. The latest readings on home price out from the authoritative S&P CoreLogic Case-Shiller Index, showing a 19th straight month of record highs. We'll get the latest on LA real estate and more from economist Dr. SELMA HEPP, the chief economist at CoreLogic, who released that report. Stocks finishing mostly higher today with the S&P 500 and NASDAQ snapping four-day losing streaks. Investors taking in uncertainty around the president's tariffs plans and also that key report that did come out this afternoon from NVIDIA, coming out better than expected. Gold held above 2,900 an ounce. Bitcoin is back down to around 84,000. The S&P 500 did manage a small gain of just about 1 point, settling at 5,956. The NASDAQ rose just about 50 points at 19,075. The Dow pulling back 188 points, the first drop for the blue chip in 3 days. It was a volatile session, a seesaw session today for the S&P 500 and the NASDAQ, bouncing back in the morning trading from the four-day losing streaks. And then we did see some dampening by the latest tariff threats from the White House in the afternoon. The president announced this week that he planned to slap 25% tariffs on imports from the European Union. Investors also anxiously awaited NVIDIA's fourth quarter earnings report, which came out after the closing bell. We'll be taking a closer look at that. Shares of NVIDIA did finish just about 4% higher today, and we'll take a look at the after-hours action here in just a moment. Right now on your money, the markets, the economy, and the big NVIDIA earnings news out this afternoon, the big news of the week. Joining us live now, Daniel Ives, Managing Director and Global Head of Technology Research at Wedbush Securities, headquartered right in the heart of downtown Los Angeles. Daniel Ives, thank you very much for taking the call on this big story this afternoon.
Great to be here. Thanks.
Massive day for the global markets following what's happening in the AI world, which you track second by second, minute by minute. Give us your reaction to the NVIDIA news this afternoon.
Yeah, look, this is all the global markets is watching this because NVIDIA is the foundation of the AI revolution. I thought these were just robust, another drop the mic quarter. I mean, you look at demand, demand's basically about 2 to 3x more than the street expected for its new Blackwell chips. And that what that really means is that companies are lining up to go down the AI path with NVIDIA. And I think a lot of the DeepSeek fears are way overdone, and this report proves it.
DeepSeek, of course, that was the Chinese entity that burst on the scene out of nowhere, about 3-4 weeks ago now, which rattled the markets, including NVIDIA. NVIDIA took that big hit on that DeepSeek news, which DeepSeek supposedly came out with something that undercut pricing pretty much in the entire AI world. How has all that shaken out since that big news came out?
Look, I mean, we continue to believe DeepSeek is actually bullish for NVIDIA. And overall AI, because the cheaper the models get, that's just going to fuel more and more use cases. And I think when it came to DeepSeek and there's more and more worries, investors keep waiting to find a crack in this spending trend. But this is unparalleled. This is a once in a 40, 50-year cycle that's being led by NVIDIA, but then other hyperscalers, Mag 7 stocks, that are going to continue to lead it and spread to the rest of tech. And I think they continue to just execute and show numbers that are basically historical.
All right, taking a closer look at what came out this afternoon. Have you had a chance to dissect this? It looks like NVIDIA's report surpassing estimates, right? And give us some of the details of what came out this afternoon.
Yeah, it's about $1.5 billion beat, and they guided up by about $1 billion. If you look Blackwell, which is their new chip, Street was thinking this is going to be about maybe 6 billion tops. It was actually 11 billion. So it just shows that demand for the next gen chip is really unprecedented. Look, China export controls, that clearly, that would be a bit of a headwind, but it's not that too much of an incremental headwind. They talked about in the conference call. And I think this is one where it is hard to poke holes in anything. And I continue to think this is an undervalued name, could be a $200 stock.
On there live with Daniel Ives, who was a leader in research on NVIDIA and in the tech space overall, managing director and global head of technology research at Wedbush Securities. You see that big Wedbush sign on top of the building there in the heart of downtown Los Angeles. Daniel Ives following the tech sector very, very closely. And looks like the other news this week, looks like the administration looking to restrict chip sales to China as the tariff situation heats up. What about all that big news that we have to digest this week as well?
Hey, look, I think it's a game of high-stakes poker between Trump, D.C., and Beijing. And right now, U.S. is ahead of China for the first time in 30 years when it comes to tech because of AI. So it's about restricting, but it's a way to get Beijing to the table, to get some deal done in terms of broader trade negotiation. That's how this is going to play out. And I think for the first time in many, many years, U.S. has an upper hand versus China when it comes to tech. But we continue to think a deal's done 6 to 9 months can be a lot less onerous, than I think people are thinking.
That is very significant. Tell us in what areas the U.S. is exceeding China now with AI. It looks like they pretty much ripped us off, lock, stock, and barrel when they came out with the DeepSeek, right?
Well, that's right. DeepSeek is a shot across the bow, but the reality is that it's NVIDIA chips, it's OpenAI, it's Microsoft, it's Alphabet, it's Palantir. And those U.S. tech companies that are leading the AI revolution. Chinese companies are going to play a big role. Alibaba, others. DeepSeek's a great model. But the reality is that trade negotiations and tariffs are going to happen, and export controls are going to play out because AI all starts with NVIDIA, U.S. company. And I think that's what you're seeing play out more and more is that Trump administration knows for the first time in decades and decades, U.S. is ahead of China when it comes to tech.
On the air with Daniel Ives with Wedbush. And so NVIDIA stock ahead of the announcement, closing higher by nearly $5 back to 131 and change. It's seen a pretty decent rebound since that DeepSeek news came out several weeks ago. What do you see ahead for NVIDIA stock here now?
I mean, look, 175 base case, $200 bull case. Look, as we always say, like the bears, they'll be in hibernation mode, and they can never see AI in the spreadsheets. They missed every transformational tech stock the last 20 years. I think NVIDIA, it's less than halfway through where we think this is going over the next few years. These numbers just give further confidence in that story.
Tell us more about the AI offerings these days, especially at NVIDIA. You mentioned Blackwell, right? Jensen, and maybe you can give us expand our vocabulary here.
Look, I think, it's about Blackwell is really these next-gen chips. That's what's fueling this AI revolution. You can't go down AI without an NVIDIA chip. But I think the most important thing from an investing perspective is now it's about software names, the use cases that are fueling this. Palantir, Snowflake, MongoDB, Oracle. See, now it's about the second, third derivatives, even cybersecurity, that are playing out across tech. And I think that continues to be the theme here. The haters hate. That's what they always do. But the reason we think tech stocks are up another 25% this year, this is the theme fueling it. $2 trillion AI CapEx in the next 3 years.
All right, and we've seen Apple make a big move into the AI world as well. What do you make of Apple's move big into AI now?
They play chess, others play checkers. I mean, they have 1.5 billion iPhones, 2.4 billion iOS devices. They're a toll collector, whether it's China, U.S., Australia. any app is going to come through Apple. And they're going to continue. I think 25% of the world's population ultimately accesses AI through an Apple device. The consumer revolution comes through Cupertino. And I think that's the whole point here. This is not just about NVIDIA, one company. This is the start of a fourth industrial revolution. We're year 3 into an 8 to 10 year build out.
Tim Cook, of course, running Apple, and Jensen Huang, the guy at NVIDIA. These are all giants in the tech world. Jensen certainly is a real success story. Probably needs more attention. Have you had a chance to interact with him?
Yeah, I mean, we've interacted with Jensen, many times over the years, and in my opinion, you're talking about one of the best tech minds, one of the best leaders in the world, regardless of tech. He understands where everything's going. And I think we're not even talking about AI if it's not for Jensen. And you go back years ago, he had the vision, and NVIDIA had the vision. Street was skeptical. And I think you are watching the Babe Ruth of tech, the Gretzky, or whatever, the LeBron, however you want to think about it, of the tech world play out in front of our eyes.
Fantastic. Very exciting time, a very exciting day for you with all this big news. The other story that came out this afternoon, I see here C3.ai shares down about 5% this afternoon, despite better than expected earnings news. What do we need to know about that enterprise software company?
No, look, we're bullish on that, just like obviously Palantir being one of our favorites. These stocks are going to be choppy, like as they report earnings, but you've got to focus forest through the trees. And, this is one of the core ways to play AI as a second, third derivative.
Anything else on your radar screen? Any specific places where you are putting money now and or taking it off the table in the tech space?
To me, it's not off the table. You double down. It's second, third derivatives. There's a lot of fear in the market. You look at these numbers, you look at earnings season, a lot of headline risk. I mean, in my opinion, it's really more the opportunities across tech, across software, across cybersecurity, and that's our view. Like, in the next 12 to 18 months, we'll be talking NASDAQ 25,000, despite maybe some of the white knuckle moments that we're going through.
NVIDIA now a part of the Dow Jones Industrial Average, too, by the way, since just in the last month or so. Tell us about the significance of that.
It's one of the biggest barometers in the global markets, in terms of not just AI, but broader tech. And I think that was a smart move because you need to update that index. And NVIDIA not being in there wouldn't make sense. And I think that was something where it becomes even more and more of a play as a barometer of that market related to tech.
The observation on this program has been made that that cryptos seem to react to the action in the NASDAQ. Is that something that you've given some thought about, and have you noticed that as well?
Yeah, look, it's a risk on, risk off, right? So it's like as NASDAQ, you risk off, you'll see Bitcoin as well. That happens, but we don't worry about that. I continue to think the path for Bitcoin's higher. I think you continue to view more and more in terms of looking at that, where public companies are going to more and more play in that market. The regulatory environment's massively changing. It's like you go through ebbs and flows. That creates opportunity, right? I mean, and that's always been our thesis the last 25 years covering tech.
And we talked to the biggest fans of crypto here, as well as the harshest critics. This is our first crypto-related conversation. So, where do you weigh in on crypto, Bitcoin, and the other names?
Yeah, we're bullish on Bitcoin. We're bullish that it goes higher. I think it's we're just going through a digestion period, consolidation, but to some extent, I think the path is higher for Bitcoin and just overall crypto assets, given where we think we're heading, especially from a regulatory environment and just, ultimately in terms of more and more of the use cases.
All right, and you do a very thorough analysis and research. What's the best way for people to access your excellent research papers there at Wedbush?
Yeah, just follow me on X, Dives Tech, LinkedIn. Haters, lovers, either or, and you could read our research, some of the research out there, or contact Wedbush.
Daniel Ives, thank you very much for taking the call here on this big day. Appreciate it very, very much. And I look forward to seeing you very soon. Daniel Ives, Managing Director and Global Head of Technology Research at Wedbush Securities, headquartered right here in the heart of downtown Los Angeles. Live with us here on Mottek On Money on 790 KABC. We'll take a closer look at that NVIDIA news and the overall market action here in just a moment. But first, the latest on your ride this afternoon. Gorgeous day here on 790 KABC. Frank Mottek here. Did you know that for more than 10,000 years, gold has been the greatest store of value and considered a safe haven asset to preserve your wealth? Well, now with the U.S. debt at more than $36 trillion and climbing, the possible recession on the horizon, and the development of the digital dollar, central bank digital currency, it's more critical now than ever before to safeguard your assets, like your cash savings and retirement accounts, with physical gold. Opening a gold IRA is one of the best ways to secure your wealth and create a stable financial future. Stop worrying about your retirement and the market and cash savings in the bank. Feel confident, prepared, and in control with physical gold and silver. Give Joe Morgan a call now at 1-800-753-8534. Mention Frank Mottek, and you could get $1,000 worth of silver with a qualifying purchase. Call now 1-800-753-8534 or visit UnitedGoldGroup.com. Mottek On Money continues here, 790 KABC. Good afternoon. Mixed finish for stocks today with NVIDIA in focus after the closing bell, and it's better than expected earnings news. The Dow down 188 at 43,433. The S&P 500 eked out a closing gain of just about a point at 5,956. And the NASDAQ pulled up by 49 points today to 19,075. The yield in the 10-year note is back down to 4.26%. That's the one that impacts the fixed-rate mortgage rates. We'll be taking a closer look at mortgage rates as well as home prices coming up in the next half hour. I'll be speaking live to economist Dr. SELMA HEPP with CoreLogic, who released the S&P CoreLogic Case-Shiller Home Price Index this week, which includes Los Angeles. And we'll get an update on what's happening on the home price front, as well as what's ahead here, given the horrific firestorm damage we've seen in the Palisades and Altadena, as well as other parts of Southern California as the rebuilding process takes place. It's impacting, of course, the general economy, indeed, not only the Los Angeles economy, but the national economy. We'll get an update on that coming up in the next half hour. Stephen CHEUNG, the president and CEO of the Los Angeles County Economic Development Corporation, LAEDC, will be joining me live later this hour. Big day for the LAEDC. Today was the big announcement of the latest economic forecast for Los Angeles and this region. They released that forecast today. Stephen CHEUNG will be live with me to talk about that, and we'll get an update on what's happening with the local economy. Taking a look at the price of gold now, it's up more than $4 here at $2,935 an ounce. Crude oil futures cracked below $70 a barrel this week, despite the rising tensions in the Middle East, with Iran making new threats against Israel and ongoing tensions there. The price of oil right now hovering just below $69 a barrel. Cryptos have seen a wild ride this week. Right now, a Bitcoin down about 200, back to 84,033. Ethereum down 5 at 2,330. Doge at the moment at 20 cents. Turning now to NVIDIA. NVIDIA stock did close higher today, up $4.65 at 131.28. Pretty flat here in after-hours trading. In NVIDIA's latest reported quarter, the company surpassed estimates by $1.9 billion. And before that, NVIDIA stock fell when its revenue did not exceed expectations by as much as analysts had hoped. NVIDIA stock in focus, will be in focus, of course, first thing tomorrow morning at the market opening. Right now, after hours, NVIDIA shares down $1.24 at 130 and change. The head of NVIDIA says DeepSeek's big innovation as its open source AI model. Let's see here. He said that DeepSeek was an excellent innovation in his words, but its most important innovation was its open source, world-class reasoning AI model. This is the head of NVIDIA talking about DeepSeek. He says it's an excellent innovation. He said at the end of the company's earnings call, but even more importantly, it has open-sourced a world-class reasoning AI model. Nearly every AI developer is applying R1 or chain of thought and reinforcement learning techniques like R1 to scale their model's performance. So the head of NVIDIA calling DeepSeek an excellent innovation. And as we heard from one of the top tech analysts a moment ago, Looks like we're well ahead of the Chinese on this DeepSeek and AI overall. So Jensen Huang, the head of NVIDIA, commenting about DeepSeek in that earnings call this afternoon. So NVIDIA keeping its winning streak alive, coming in with better than expected earnings this afternoon, and will be in the spotlight first thing tomorrow morning. Taking a look at Apple, which we talked about as well. Apple, of course, now has its Apple AI, and Apple stock today pulling back nearly $7, down $6.68 at $240.36. Also after the bell today, we heard from C3.ai. Shares tumbling more than 5% after hours this afternoon, despite better than expected revenue and a narrower than expected loss in the company's third quarter. This is the enterprise software company. The company posted a third quarter loss of 62 cents a share after a loss of 60 cents in the previous year's quarter. Keep an eye on that one. Let's bring up silver, which we track closely here as well. Let's bring up the latest silver price, pulling back about 7 cents today to $32.20. And platinum, which has been back in the spotlight lately, down $1.40 at $975.20. And now the latest news on 790 KABC. Mottek On Money continues here in 790 KABC. Good afternoon. Big day for the Main Street economy here in Los Angeles. At East LA College today, the Los Angeles County Economic Development Corporation, the LAEDC, released its closely followed annual economic forecast and industry outlook. With the massive firestorm recovery in focus, the LAEDC focusing on the economy and the recovery here. This year's forecast heavily focused on the challenges following the recent wildfires here in the Los Angeles area, as well as tariffs and the ongoing impact of the Hollywood strikes, all in focus. This is the big event of the year where many businesses plan their year based on what is said at this big event. And joining us live now is Stephen CHEUNG, the president and CEO of the Los Angeles County Economic Development Corporation, the LAEDC. Stephen CHEUNG, thank you very much for taking the call on this big day for you and continuing the tradition here to inform the business audience about the forecast just released.
Thank you so much, Frank, for having me back.
Wonderful to have you with us. And take it from the top, give us some of the highlights here of the forecast you released this morning.
Great. Thank you so much. Well, we have about 450 attendees really trying to figure out what's happening with our economy moving into 2025. As we looked at the federal, state, and local economy from last year, it was okay. It was flat in terms of growth. But as we're looking in 2025, we're seeing a lot of challenges. Of course, the LA wildfires can be front and center, which I can give you a bit more details. But as we're kind of projecting what else is happening in terms of the impact to this economy, the federal government's level of decision is going to have major impact on our future. This includes tariffs, immigration, and also potential federal freezes of grants. And combined together, this is going to affect the way that we look at our recovery. As we're also planning for opportunities, so we're not just looking at the threats, we're seeing that the entertainment sector, for example, continues to be very strong. There could be additional stimulus that can help us recover quite quickly. And then additionally, between the Olympic Games, the FIFA World Cup, the Super Bowl, and many other sporting events, the sports and entertainment sector will be a key driver to make sure we're able to recover as a region.
On the air live with Stephen CHEUNG, the president and CEO of the LAEDC. I know you had a big discussion on the firestorm recovery. What were some of the big takeaways from those discussions today?
Yes. Well, we are going to be releasing a joint report with the Southern California Leadership Council, former Governor Gray Davis, as well as LA County Board of Supervisor Chair Catherine Barger, will be releasing that report tomorrow. From the report, what we found is that we're just looking at the fire zone, the burn zone that was released by CAL FIRE as a map, and we looked at the businesses that are located within the burn zone. We know now that there are about 1,863 companies located in those burn zones. And this is not including the areas outside of the burn zone, which can also be affected and impacted. But at a minimum, we wanted to get some hard data, because currently what we're hearing is the economic damage could be anywhere from $50 to $250 billion, which is not helpful when it comes to planning. That's why we need to get to the granular level. So of the 1,863 businesses that are located within the region, last year they employed over 9,610 employees. So depending on how quickly we're able to recover if we're able to recover based on the FEMA timeline of recovery, starting that recovery process within a year, the economic damage over the next 5 years can total $4.6 billion at a minimum. And if we are not able to recover quickly, it takes us 2-3 years to recover, that number can escalate up to $8.9 billion in economic output damages to this entire region, which is equivalent to anywhere from 24,000 jobs to 49,000 jobs affected for this entire region as well. So looking at the whole fire recovery process, it's quite complex, but we just needed to start this process of getting some base data out there.
Tell us, what is the vision? I know Steve Soboroff is heading up a recovery effort on behalf of the mayor, and Rick Caruso with Steadfast LA also organizing a recovery effort involving prominent philanthropists and companies and all that. Are these entities working together somehow? And what do you see ahead and how the business community is coming together on all this?
Yes, well, there are many different efforts being initiated, which is great. What we've heard is over the last month and a half, the region has now collected over $650 million in donations, which is fantastic for this region. Now we have to basically plan on making sure as you're distributing the dollars, it's going to have the long-term impact that's intended. Part of the advocacy that we've been doing is to make sure that we allocate some of that funding to small business recovery. And yes, of course, it's important to give the money directly to the individual homeowners and renters that are impacted. But if you want to recover, you have to make sure that those small businesses are part of this equation as well. And that's why today at the economic forecast, we were delighted that Governor Gavin Newsom made a surprise visit, and we had a fireside chat with him directly. And right afterwards, he had a press conference that he announced that the state of California will be adding another $140 million to the California Jobs First initiative to help us really plan for the future of economic resiliency. At the same time, there's going to be about $10 million that he's going to be allocating for the LA Rises initiative that will support the Los Angeles Regional Small Business Fund that's been administered by the county and the city of Los Angeles. So these collaborative effort is going to be amazing. And lastly, he also announced that the Los Angeles California Jobs First initiative, which LADC is the convener, the regional convener in partnership with the California Community Foundation as the fiscal agent, we will be receiving additional $3 million as a part of this initiative to make sure that we're able to uphold and stand up the supportive services that are required for this long-term recovery process that we know is going to take years before we can truly recover.
See you tonight. Read about it tomorrow, but hear it now on Mottek On Money on 790 KABC, live on the air with Stephen CHEUNG, the president and CEO of the LAEDC, which is also leading the recovery efforts here as far as resources are concerned. Last time we spoke live on the air was shortly after the firestorms, and you immediately marshaled the resources through the LAEDC and other business groups supporting your efforts. Since then, tell us what else is out there now, and what other resources do you want to bring to the folks' attention out there?
Yeah, for folks who are still tracking and needing additional resources, which a lot of people are still seeking because sometimes the information can be a bit confusing, LADC, in partnership with our partners, immediately relaunched the Together for LA website. This is a source where you can basically find all the resources that you need for a business and small businesses, especially for the grant opportunities that might be available, for additional assistance that might be available. So togetherforla.com or togetherforla.org. This is a partnership between LADC, the LA Area Chamber of Commerce, LA County Department of Economic Opportunity, LA City Economic and Workforce Development Department, BizFed LA, Dr. Lucy Jones Center, and dozens of other partners in order for us to bring all the resources together to streamline it so it becomes easy for our small businesses to get the information that they need. Separately, every Friday we have a webinar. So instead of having different webinars on our own, we consolidated all our resources. It's easier for our businesses to just go to one single source to get information about small business administration loan application, about FEMA grants, about city and county LA Regional Small Business Fund, or even the Workers Disruption Fund as well. So all these resources and grants that will be available will continue to be available through this website, togetherforla.org.
Stephen CHEUNG, thank you for laying it out very effectively, as always. Any other takeaways there? I know your top economist, Shannon Sedgwick, had a big day today there with that presentation. Any other insights? What what the economic growth number will look like in the year ahead, and job expectations? Any other details that you could share with us now?
Yeah, I think as we're looking in the future, our projection is that the growth of the economy, our GDP, is not going to fluctuate that much. It's not going to change that much. And if by keeping stable, that's good news for us because we don't want to see a decline. But that's not guaranteed. As we're looking at some of these challenges, you're going to have, as I was mentioning before, if there are additional tariffs that are going to be added, this is going to increase the price of materials for construction, for example. You will need lumber, you'll need steel, you'll need aluminum just to rebuild. And given the size of the damage that's happening in Palisades and in Altadena, you're going to basically need a lot of lumber and a lot of these goods. So any increase in pricing because of tariffs is going to impact our ability to recover as quickly as we need. Second, immigration. If there are going to be additional immigration changes, this can potentially impact our workforce. As we know, our construction workforce are somewhat dependent on our population as well. And so any changes to the immigration policies could potentially impact that workforce as well. And finally, the state of California relies on about $170 billion in federal grants and funds every single year. Any disruption to that can impact the way that we're able to deliver the services, especially since the state of California have already issued a $2.5 billion commitment to wildfire recovery. A lot of it's dependent on whether we can recoup those costs from our federal partners. If those funds are frozen, then this is going to be on our backs. So it's going to be very difficult for the state and the local government to really sustain this kind of support if we don't get that partnership with the federal government. So all these are really impacting the future of Los Angeles economy.
Stephen CHEUNG, the president and CEO of the Los Angeles County Economic Development Corporation, the LAEDC, on the big story of the day, the release of the LAEDC's economic forecast and industry outlook, which you can check out on their website, of course. Stephen CHEUNG, thank you very much for joining us live here this afternoon.
Thank you so much. Again, our report will be available online, laedc.org. Tomorrow, the SCLC, the Southern California Leadership Council Fire Report, will also be available on our website as well. So we look forward to many folks reading the report and letting us know how we can be of support. Thank you.
Thank you very much, Stephen. We'll keep an open line to you on all of this as well. Now the latest on the freeways here in 790 KBC. Mottek On Money continues, 790 KBC. Turning now to real estate. The latest readings on home prices out now from the authoritative S&P CoreLogic Case-Shiller Home Price Index, showing a 19th straight month of record highs, with home affordability and availability apparently getting even worse here now in the Los Angeles area. Let's get the latest on what's happening with economist Dr. SELMA HEPP, the chief economist at CoreLogic, who released that report. SELMA HEPP, wonderful to have you with us here this afternoon.
Hi, Frank. Thanks so much for having me again.
So much has happened since our last conversation with the firestorms and so forth. You just released your report, which calculates the prices just before the storms hit, right? Take it from the top and tell us about your latest report.
Yeah, thanks so much. So the report you're referring to is CoreLogic Case-Shiller Home Price Index, and what the latest numbers show was actually almost a 4% increase on a year-over-year basis, and this is a little bit faster than we saw in previous couple of months in terms of annual appreciation, but it's actually sort of the reason for the increase in appreciation is because we're comparing to end of 2023 when the housing market slowed considerably as well. So it's really a function of comparison to those 2023 numbers. When we look at what's happening in terms of monthly home prices or monthly changes in home sales activity, we saw a significant slowing at the end of 2024. So we saw home prices pretty much flat in essence, essentially since middle of last year. There hasn't been much movement in terms of home prices. And like I said, they ended the year pretty softly. So what's driving that? Home buyers, in a way, they took a step back at the end of the year. There was some enthusiasm in the housing market coming into early fall when mortgage rates came down. But as mortgage rates surged as we went into election, a lot of that enthusiasm, or not just enthusiasm, just as much as people taking a step back to see what happens next, right, in terms of policy changes, in terms of maybe employment or unemployment. We are now worried about what happens with some of the markets in terms of large layoffs. So nevertheless, we did see a step back in terms of home buying activity. In Los Angeles, home prices similarly were up about 4%, a little bit less so, but close to 4% on a year-over-year basis.
All right, and part of that 20-city index includes San Diego, right, and San Francisco. How did those two cities do?
Yes, so San Diego is still doing a little bit better than LA. It has been so over the course of last year, but then LA is doing better than San Francisco. The weakness still really remains in the Bay Area, and especially in San Francisco itself, not necessarily even the surrounding Bay Area, simply because of lack of demand for the city itself.
What's the outlook here? We just heard from the LA EDC. They came out with their economic forecast for this year with the firestorm damage area very much and recovery in focus. I see on your list here, Tampa actually has been under pressure. They had two hurricanes that ripped through the west coast of Florida there late last year, and I see home prices actually ticked lower there. Anything instructional here on what we might expect here given the disaster we experienced here last month?
Yeah, so Florida markets are really interesting in the sense that they've experienced a number of natural disasters, and they've been a little bit more persistent than when we saw one large natural disaster, whereas they've seen year after year, season after season, hurricanes hit, particularly Gulf Coast of Florida. And as a result of that, the market there is a much more weak in terms of the demand on home price appreciation. Tampa was the weakest among the 20 markets recorded in the Case-Shiller Index, but even more so, Cape Coral, for example, Fort Myers area, it has seen largest year-over-year decline among large areas in the U.S. So much more weakness in the demand. The other thing to keep in mind about Tampa or just Florida in general, they have seen relatively more exuberance in the housing market, if I can call it that way, since the onset of the pandemic. So their prices are up actually cumulatively almost 7%. So there is also some level of price saturation that's happening in Tampa. And on top of that, a lot of new construction, which is leading to that weakness in home prices that we see there.
Dr. Selma HEPP, the chief economist at CoreLogic, who released the authoritative S&P CoreLogic Case-Shiller Home Price Index. CoreLogic, by the way, based right here in Southern California. Dr. Selma HEPP, thank you very much for that thorough update. As always, here live with us here on Mottek On Money on 790 KABC. Stay tuned now for the 790 KABC News Blitz with Randy Wang, and I'll be back with more at 4 tomorrow afternoon, 790 KABC.
Former U.S. Navy SEAL Sean Ryan captures real stories about sacrifice and strength, uncovering truth with the heroes who live to tell it.
There are two kinds of people. They're winners and they're losers. Winners take whatever they feel.
He's tough as nails. The dude got hit with a mortar. I'm still shooting. They're still shooting. You got to finish it. You can't quit.
And they transmute it into things that are good for the world.
I had tunnel vision. I just saw a man that needed my help, and I went to get him.
Period.
The Sean Ryan Show. Follow and listen on your favorite platform.